It's 3 minutes early. That's all right. The Fib Fanatic. Good morning, Ron. How's everyone doing today? It's Friday, guys. Woo! He said in an enthusiastic voice. Good to see everybody in the room. We'll give people a minute to get in here. National Heckle Day, is it? Bring it. Bring it. Good morning, Chariot. Good to see you. Cedeno, it's good to see you back in the room. Pete, Alan, Ron, Neo, Andy, Victor, Andy Man, Mike M, Phil. Great to have you guys in here. If you follow the conversations, guys, I probably look like a jerk this morning. Mark keeps telling them to write on their charts, and Mark keeps telling them to write their rules, and Mark keeps telling them to not ask how to break rules. And guys, I know I'm a colossal pain in your ass, and I'm okay with that. Trading is about probabilities. For you guys that are in here and struggling, trading is about probabilities. And if you, I don't know, let's talk scientific method, right? You have to have the control. You have to have the thing that is consistent, and rules are consistent, patterns are consistent. And the more you deviate from that consistency, the more outliers that show up in your scientific method or something. I'm stinking at analogies, but guys, consistency, doing the same thing over and over. If your rules say I have to have strong triggers, then you have to have strong triggers. And looking for ways to circumvent your rules to stay active is one of the biggest killers of accounts, guys. So we're going to talk about consistency today, and we're going to talk about patterns today, and we're going to try and keep it simple and do what we do. And checking news first, guys. Whole lot of nothing going on today. No high impact news, so we're going to go straight into it and get going. I do check the news every day, and there is nothing to speak of. Guys, we're going to talk about two platforms. Excuse me. We're going to talk about TradingView. A lot of you guys are on TradingView. That's what the funding company uses. I'm going to tell you right now, there's only 15 of you in here, so there's not a lot of people listening. Hey Mike, good to see you. If you have opened an account in the funding company and you are struggling to pass it, pay attention when we talk about TradingView, guys. I'm going to give you a couple little hints and secrets that are really going to do wonders. Then we're going to talk about NinjaTrader as well. NinjaTrader. Good morning, Andy Man. They wore out their button pushing fingers yesterday. They're on their yachts, Ron. They have plans. They're already doing the weekend. We're also going to talk about NinjaTrader. I'm going to say that neither, hey Andy V, great to see you. Neither platform is superior. Neither platform is preferred. Guys, NinjaTrader and TradingView are apples and oranges. I like showing this every day. If you're using NinjaTrader, you're using dynamic Renko bars. They move a little faster. The rules are different for entry. If you are using TradingView, the bars move a little slower, requires a little more patience. But for those of us that get jumpy when the market gets jumpy, TradingView is pretty cool. It slows me down, and I'm a big fan. What we're going to do today, and what we do every day, is I'm going to give you everything that you need to be successful with this software, guys. Not everything that you can do with the software. Let's be very clear. I'm not going to give you every option that could ever be capitalized on with the software. I'm going to give you everything that you need to be successful with this software, guys. And how do we define success? Getting paid every day, consistently, taking more out of the market than we put into the market. So we're going to do that on two different platforms, and we're going to do it simply, guys, and we're going to talk about three things. I got a message today from someone that was in the class a year ago, and they told me, hey, I listened in on your class yesterday, and it's amazing that you haven't changed a word in a year, that you still focus on momentum, that you still talk about that clear path and having a defined entry, And guys, when you have all three of these, you have a high probability trade. You have a trade where each indicator on every chart agrees with the rules for the trade. For NinjaTrader, it is literally called the high probability trend trade. And it's only 3 rules, guys, and it's only 2 charts. Both platforms only take 2 charts to find success. Large chart, small chart. Large charts on both platforms will define direction, momentum, areas. Small charts are entry charts because they refine the big broad stroke that this large chart is. We're using 2 charts because we're not in charge, someone else is. Ron says the big boys wore out their button pushing fingers. The big boys are the large crowd. Your large chart is like a glimpse into what the large crowd, the big boys and girls, want to have happen. The large crowd typically wins, guys. They create trends and we follow their trends. They establish momentum and we use their momentum to our advantage. They react at key areas and we choose not to trade into those areas where their reaction is most likely to happen, guys. And by following the large crowd, it sets us up on the small chart, the small crowd, to win against their imminent fight, guys. And your rules are so specific that you will pinpoint right where these guys are most likely to fail. This becomes your entry for the highest probability trend trade. Let's do the PowerPoint today. Let's keep it focused. It's Friday. So what we're going to do, both platforms, and I will run through both this morning. I'm going to start with NinjaTrader. Guys, I want you to learn to read your charts. I want you to be able to look at your charts and speak out to those advantages, to be able to say, I have momentum, or my path is clear. I can define my entry, guys, and that's going to set you up for the highest probability trend trade ever. But chart reading is the focus because chart reading is 90% of your day. You will not spend an enormous amount of time actively trading the market if you are following a plan, if you have rules. Literally 90%, I would wager to say 95% of the day is spent reading your indicators and waiting for advantages. 10% of your day is actively trading. So just for a little context, if you sit at your computer for 6 hours today, that's 360 minutes, you are likely to be active in the market 36 minutes tops. I would say it's probably going to be closer to 18. Most trades take 1 to 2 minutes start to completion when they're the right trades. But when you learn to read your charts, guys, when you start to recognize these advantages, when you embrace these advantages, sounds like I'm in the bathroom. I'm not. Maybe my microphone's a little further away. I'll put it closer. Ooh, hold on. You know what? Let me make sure that it's not trying to pick up on my headset. Thanks, Ron. 1 second, guys. Let's check that microphone. No, it's not coming from the headset. Was that better when I moved it a little closer? Better now? Cool. I've got it in front of me. Guys, you will understand where the market is likely to continue with a little bit of study. This likely to continue point is the entry for your trend trades, where the market is likely to continue with that underlying trend. You'll understand where the market is likely to go. This is going to help with profit targets, guys. And you will understand where the market is likely to stop. We call these termination conditions, and I want you to pay special attention to areas where the market is likely to stop, because this is the biggest killer of new users, because this is the area that's going to keep you out of the market, that's going to keep you from hoping and wishing that the market would continue, and it's really going to keep you sitting on your hands for a little bit. So I want you to embrace chart reading first. Your chart reading will turn you into an amazing trader, and it'll open doors for you. So the rules for the high probability trend trade are just the 3 rules. Each rule, when true, provides an advantage. So a trade is a recipe. It's a recipe that says, I will enter the market if I have momentum, if my path is clear, and if I can define my entry area. And guys, when you have these 3 advantages, this recipe for the high probability trend trade on NinjaTrader is a trade that typically wins 70 to 80% of the time. And what you're doing is you're building a foundation. You're learning to look at your charts and know what's working for you and what maybe is working against you. So momentum and path, these are your core. These are the two that'll carry you to the promised land. There are people in this room whose entire trading plans revolve around momentum and path. Yours can too. It's enough to create a consistent plan. Your first entry area, rule number 3, is just a trend trade. It's going with the flow, guys. And we're going to talk about all of these things. And like I said earlier, it's only 2 charts. Even on TradingView, it's only 2 charts, guys. There's the big chart, there's the small chart, the broad stroke, the refinement, the what does the large crowd want to have happen, where's the small crowd fighting. And the day starts with us learning rules, learning to identify rules, learning to recognize when those rules are true, because when they're true, and Andy, this goes back to why I think annotation is so important. Your rules describe a pattern. So the market has a memory, and the market does the same darn thing every day. So when your rules describe that pattern, no matter what your rules are, what you have is this very focused, very clear, very black and white approach to entering the market. And you're entering because you can prove that pattern wins more than it loses, that it creates an edge. So we're going to learn a couple patterns for NinjaTrader. We're going to learn them for TradingView. Your job, should you choose to accept it, is to post in the room, guys. Post in the room. Post your questions, post your pictures, post your doubts, post your aspirations, post everything in the room. The people who post the most, the people who annotate the most charts, the people who talk to me more often than the people that don't, are the people that are finding success the fastest. What I ask every time you post in my room, because it is an educational room, is that you describe the momentum that you see. That you tell me how you felt about termination conditions, and that you identify your entry and state why. Because what you're doing, and again, this goes back to the conversation in the room earlier, your annotations are a recipe for success, guys. They make the trade repeatable, and they make the trade testable. And when something is testable, you can go back and look at it 50 times and prove to yourself that it wins more than it loses. And when you do that, you never hesitate to take your trade. There are no mental trading plans, guys. You've got to have a solid, concrete approach to what you do. Your annotations will also identify any challenges that you're having. And that's what I'm looking for. That's my job. If you post in my room and you tell me that you had strong triggers, but they were actually weak, we're going to have a lesson. If you told me that you had a clear path, but it was only potential, we're going to have a lesson, guys. And I love the lessons, and your questions create some great ones. And when you show me your entry and tell me why, what you're doing is you're asking, was there a way to reduce risk? And when you show me your exits, guys, I might have a trick up my sleeve to help you make a little more money on these trades. And I'll share it with you. That's my job. And I love my job. So learn the rules. Simulate, practice. Stop putting the pressure of money on yourself when you're brand new. And post in the room. And then the second thing, and this is my plea, keep it simple. Keep it focused. Trading is an individual sport. You're learning these basics so that you can find what works best for you. The easiest way to learn the basics is to have the fewest moving parts. So I give right above in Ron's comment in the chat box, guys. You have both plans for both platforms, and you also have spreadsheets. And now simplicity is going to pay dividends, guys. On your trading plans that are presented in the room, the KISS plans, there's only 2 trades on the plans. And then even more so, there's a checklist for entry, and the checklists have 3 things, guys. So focus on keeping it basic, but learn the looks that you're going to commit to. Understand what it's going to take to get you in the market, and that's where the spreadsheets come in. So the spreadsheets, I've got one for NinjaTrader, and I've also got one for TradingView. And on the NinjaTrader one, since we're talking about NinjaTrader, it breaks down each rule individually with a picture. What does it look like to have strong triggers? What is the pattern that I'm committed to? What does it look like to have a clear path? What do the rules say? How do I define my entry, guys? And when you have 3 greens, it's go. Take that trade. That's your highest probability trade. When you have weak triggers rather than strong triggers, that should become a big red flag. I choose not to take this trade. When you have a termination condition, an area likely to stop the market as opposed to a clear path, once again, it's okay. It's your right to not enter the market without an edge. There's over 500 pictures of the pattern of the trend trade. Study it, burn it into your mind. It will slow the market down. There's ideas on NASDAQ management, patterns that repeat themselves, a place to build your plan, and even the trade tracking sheet, guys. Both of your spreadsheets have trade tracking sheets. This is one of the most underutilized tools. Every time you take a trade, you should take a picture. Every time you take a picture, you should talk about what you see, why you did what you did. Guys, it doesn't do any good to say, I got in here, if you're not sure why. Right? I got in here and I got out here. Well, why? We got to make it repeatable. Your spreadsheet, when you go to the trade tracking sheet, you're going to have your annotations. You're going to present them in the room, and you will get feedback on everything that you do. The feedback, sometimes it's, hey, this is perfect. This is the best trade ever. This is such a great momentum trade. Your entry makes perfect sense. Your exits were amazing. Your thought process was solid. Put that picture in your trading plan. Try to repeat that every day. Sometimes, and more often for the brand new user, the feedback will be a little correction. Maybe you violated the first rule or the second rule or the third rule. Maybe you misread your charts. The feedback will identify it, because guys, I don't have any pressure looking at your trades. When you give me a chart that isn't moving, I can tell you exactly what's happening on that chart. And I've been doing this long enough, I could probably even tell you what you were thinking when you made that mistake. But I'm going to teach you how to avoid it. I'm going to teach you how to correct it. So I want you guys to really latch on to that trade tracking sheet. And every morning, commit 3 minutes of your day to look at what you did yesterday. Ask yourself what worked. Ask yourself what didn't work, right? Ask what's keeping you relaxed, what makes you nervous, and guys, it'll set you up for the day. It will accelerate the learning. This is a proven path to success. Post in the room a lot. Take a lot of pictures. I take probably 60 or 70 pictures a day. All the time, 60 or 70 pictures a day. Everything I do, everything I see, everything, even when I trade, I still annotate my charts. So far for 2025, where are we at? 8170 is my picture count. I'm not saying take 8,000 pictures, guys, but I'm telling you, if you take out 8,000 pictures, that market's going to slow down. It's going to slow way down, and you will call your shots. So let's talk indicators. Let's get into rules, and then guys, let's just get to the live market and have some fun. On NinjaTrader, both charts, large and small, will have areas. So what we're doing right now is we're just naming the moving pieces, right? The tools that we're going to use. Areas, for the most part, are horizontal lines, and they run the length of the chart. And each area has a name, but they all pretty much behave the same way. You're going to see a divergence high line. It's going to be a negative number with a magenta line or a hot pink line coming off of a pivot. And what happens is the market goes up and your software is running calculations, and about 2.5 bars down, your software says, man, they're losing some momentum to that push up, and you see this pink line. And a divergence line means that there was a loss of momentum. So every time you see a divergence line, I want you to say to yourself, oh, the market's losing momentum in that direction. The negative number is just a byproduct of the calculation, guys. Don't put any weight on it. 59% divergence is not better than 32 or 28 or 33 or 45. It's just a calculation number. You're going to see red Fibonacci resistance. And on your large chart, you're going to see 3 different shapes, sizes. Some will extend, some won't. They are all the same. They are areas of resistance. You will know about them long before you reach them. These are areas that could stop the market. These are areas that could create a bounce. These are areas that could reverse the market completely. And when you get to them, you'll have some rules to know what the most likely outcome will be. Fibonacci support behaves the same way in a downtrend. When the market reaches them, these are areas that could stop it, that could create a bounce, that could set off a fight. And you'll see them long before you get there. You'll know that they're there. Fibs are a great place to take profits. You'll see yellow 1-to-1s. These are Fibonacci lines that print in the moment. These are 100% Fibonacci alternates. Institutional traders use these numbers habitually. You're going to know about them. You're going to see them. The software is in a constant state of calculation, making sure that they print when necessary and that they don't when they're not. So when you see these yellow 1-to-1s and the market is trending up, they could behave as resistance. And when you see them in a downtrend, they could behave as support. You'll also see a mid-band. It's just a moving average. It'll run through the middle. When it's green, prices above it, it can behave as support. When it's magenta, prices below it, it may behave as resistance. So guys, these are just areas. You don't have to know how they come to be. You don't have to know the math that creates the negative number. You don't have to know how to understand Fibonacci. Just know the names because they all have a role. You're also going to see triggers. Sound is cutting out, Miss Kathy. Give me 1 second, guys. I'll be back in a minute. On my way back. Let me go live. Let me pop that out. Let's get a chat box. Is that better? Sometimes me rebooting just kind of fixes everything that ails us. Awesome. Guys, triggers are the next indicator. Triggers do 90% of the heavy lifting in your plan. There are small triggers, 2 solid lines. There are large triggers, 2 dashed lines. They're the same on either time frame. They look exactly the same whether it's the big chart or the small chart. When they're green, they're going up. When they're red, they're going down. And guys, we're going to use trigger lines to define momentum, making sure that we're in a market where the odds are favorable for it to continue in the direction of that trend. We're going to use trigger lines to define termination conditions, keeping you out of trading into areas that could potentially stop the market. And we're going to use large trigger lines to define your amazing entries. You will be floored at the accuracy of this methodology, and all it is a couple simple rules on only 2 charts. And if you learn them individually, if you learn how to recognize momentum, path, and entry, guys, it opens the doors for everything else that you can do with the software. So we're going to break them down, each rule one at a time. And it starts on the large chart, and it starts with large triggers, guys. And this is the easiest lesson you'll ever get. The only way that you can have strong triggers is if you're trading with the trend. And that's pretty cool because the trend is your friend, right? What a great cliche. So if the background is green, your trend is up. No opinions, just green, it's up. If the background is red, your trend is down. And the path of least resistance, guys, the highest chance of success comes from trading with the trend. In an uptrend, both small and large triggers must be green, just like your background. In a downtrend, both small and large triggers must be red, just like your background. If the trigger line color doesn't match one another or the background, you don't have strong triggers, which means that rule number 1 is not met, which means it's okay to do nothing. Strong triggers is just a look. It's only triggers. It has nothing to do with price bars. It has nothing to do with areas. It is simply a separation between the small and large. So in an uptrend, the small triggers will be above and away from the large, and that gap between the two, no matter how big, that lets me know that the odds are favorable for the market to continue up. That's strong triggers. Looks like scissors that are open, guys. Odds favorable momentum is our battle cry in this room, because when you have strong triggers, whether it's up or when the smalls are below the large and space is there and they're down, the odds are favorable for the market to continue in the direction of the trend. This is a look that pushes the market, and on a large chart, it's hard to stop that momentum. This is exactly what you're going to look for. When areas have the potential to break, we use momentum to make us feel better about that potential break. And guys, when you have strong triggers up or down, your large chart is going to sprout these little tails or these wicks. John Novak called them black pokey things once, which still cracks me up. And guys, this is going to be that smaller chart fight. This is going to be that retracement on a smaller, faster chart. You're going to use rule number 3 to define where that tail is most likely to form. You're going to use rule number 3 to take that highest probability trade, guys. And momentum leads the way for a reason, but momentum does go away. Momentum goes away when the small triggers work their way back inside of the large triggers, guys. When the space is no longer present, when the gap is not there, this is weakness. Now, it's no secret in this room, I'm a little bit of a language nerd. It's all right, Andy. You don't have to call your shots. When the trade's over, post it. Give us the whys. It'll be awesome. Weakness is the opposite of strength, guys. Odds favorable makes me feel good. When I have weakness, anything can happen. That doesn't inspire confidence in me risking my money. So for you brand new users, keep it very black and white. Let it either be strength with separation or let it be weakness with no separation. And there's only one look that gets you looking for rule number 2. Is everybody good with that? That's a pretty basic lesson, and it comes on the most current bar. So looking at my large chart, guys, this is crude oil. And the colors are going to keep changing just to make it difficult. Smalls are below the large, space between, but my small triggers are turning up, guys. The colors don't match. Well, now they do. This is what happens in transition. So let's take a picture. Smalls are below the large. There is space between. All the colors match in this picture. Can you give me a Y in the room, especially if you're new? This is your strong trigger look. So watch this. I'm going to show you how to get to where you want to be faster. Smalls below large, space between, colors match, strong triggers, odds favorable momentum, rule 1 met. How long did that take? 20 seconds to take the picture, to identify why it's strong triggers? Guys, I want you to start taking these pictures and go to that spreadsheet. And I've given you a huge head start, but start filling it with your pictures of strong triggers, guys. And if you take 25 pictures of strong triggers and you take the time to annotate it, you're never going to make the mistake between strength and weakness. You're never going to say, hey, I wonder if that was strong. You're going to say, dagnabbit, that is strong. And you're going to say it out loud, and you're going to scare your cats. So it's okay to scare the cat when we're talking about advantages. When the rule is met, guys, when the momentum is there, we're going to look for a clear path. We're going to make sure that there's no terminations. We want to make sure that there's room to profit targets. I like that phrase. I'm here to make money, guys. I'm not going to trade directly into a wall that could take my money. There has to be room. There has to be room for me to get paid. That's a clear path. Termination conditions, from the user guide definition, a termination condition is a Fibonacci-based indicator that has the potential to stop or reverse the market. That's a lot of words. Termination conditions are horizontal lines on the large chart, regardless of whether they are divergence highs, divergence lows, one-to-ones, Fibonacci support or resistance. They all behave the same, guys. These are the lines where the large crowd is making decisions. These are the lines where buyers are buying in and sellers are selling and profits are taken and fights happen, guys. And you're going to know about them. And you don't want to be a part of that large chart decision, that large crowd decision. So to define a termination condition, to know if rule number 2 is not met and you should be sitting on your hands, we're going to let the large crowd get there. So price reaches the area. If you are into taking notes, if you are into writing a recipe for success, write this down. When price reaches an area, count triggers. Your triggers will tell you everything you need to know, guys. When price hits these yellow one-to-ones, I'm done with price. The decision-making process is set off. I'm going to count triggers. If no trigger lines, not my small, not my large, if no trigger lines have made it above this area of resistance, I have a termination condition. That is textbook definition. And you have to assume, if you want to be on the good side of things, you have to assume that this area will hold. You have to assume that this area will create an untradeable bounce. You have to believe that this area could reverse the market completely the exact same way it did 10 minutes earlier when price reached yellow 1-to-1s and it no longer went up. So no triggers, no trade is the easiest phrase. If two of your triggers break through, especially with momentum, really only with momentum, you can say to yourself, this area has the potential to break. But remember that trading is about having an edge, and trading is about having an advantage. And two triggers through an area, guys, is a pretty lousy look. It will work every now and then. It's not your best look. It's not your highest chance of success. If you really want to trade the potential of an area to break, and this is the second trade on your trading plan that I gave you for Ninja Trader. 3 trigger lines through the area. Both of your small, one of the large. When 3 trigger lines break through with all that momentum, now we're really starting to see the potential for that breakout. And because decisions are made at these areas, it's not uncommon to see the market pull right back and test it. That's going to be your entry for what we call a medium probability trend trade. When most of your indicators line up, but a small issue exists. Your issue is that that's only potential. The rule isn't met yet for rule number 2. These can be amazing trades. And I've given you a very solid plan to take them with the highest chance of success. But guys, it is just potential. You're going to want to manage a little more assertively. Now, when 4 trigger lines break through, guys, 4 trigger lines is amazing. 4 trigger lines means that resistance is no longer resistance, that it has broken, that your path is clear. And resistance will behave as support, guys. And support will behave as resistance when the market clears through. And if we go back to that large chart again, what you'll see is that with the potential, it didn't. And with the potential, we got a big retracement. And with weakness, right at a fib, that's where the reversal came from. There's one of those tails that's a potential entry. And with 2 triggers through, there's one of those tails that's a potential entry. The people who control the market know where these areas are because they created these areas with their past movement. And that's why they respect these areas. So if you keep it simple, if every time you get to an area you just count triggers and really say to yourself, as a brand new user, I want the confidence that comes through the memory of success. I'm going to wait for a clear path. After a week, you'll start taking that potential to break trade and finding success with it if you're following rules. So when you have momentum and when you have a clear path, it's time to go to the small chart and define an entry, guys. And you're going to do it with some pretty cool accuracy. So much so that you're going to use a limit order to buy or sell a pullback in an area inside of triggers. You're going to use a limit order, which means that you're literally going to wait for that small crowd to fight, and you're going to wait for them at an area, at a fib, at a midband, or a yellow 1-to-1, because the same way areas on the large chart can stop a trend, on a small chart, they can create that ricochet in the direction of the trend that's already underway. But the key to that lesson, guys, is that area is inside of triggers, large triggers. And your small chart is going to have large triggers from the large chart and large triggers from the small chart because price returns to large triggers. It's a regression of the mean. These are moving averages. So when you're looking at your entry pattern, and I'm very specific to say it's a pattern, guys, your entry is going to look the same for a high probability trend trade every time. And it begins with a reversal bar on the small chart when the rules are met. So when the large chart is up, when the large chart has momentum, when the large chart has a clear path, you're going to wait for a down bar on the small chart. And your brain is going to tell you, holy crap, they're reversing. Guys, they're not reversing. This is just a little pushback, a little shove against everything that's going up. You can define where that shove is most likely to go, where the pullback is most likely to go, using the large triggers. somewhere from the top line of those large triggers to the bottom line of those large triggers. That's your retracement zone, guys. That's where the market is most likely to retrace. It's not a guarantee, but it's most likely to retrace. But trigger lines are like clouds to a skydiver. They're not bouncy. There's no impact, guys. You have to have a wall to create that bounce. That wall is an area. Fibonacci resistance or support, yellow 1-to-1s, or a mid-band. One is not more important than the other. But your entry will come from whichever area is closest to your reversal bar. The highest form of support happens to be a mid-band. I'm going to right click, I'm going to activate a limit order, and I'm going to dare them to come get me and give me an entry, because that is my highest probability entry. I could define where the retracement was most likely to go. I can define where the market is most likely to bounce, and by doing so, I know exactly where the market shouldn't go. It shouldn't make it beyond that retracement. It shouldn't make it beyond those areas. Any lines below the triggers in a long trade is where the market should not go. Any entries taken from beyond those triggers is an entry based in hope, because once you get beyond the triggers, guys, you don't know if, when, or where that market is going to go up. We saw some great examples of avoidable losers yesterday from that concept exactly. Is anybody new to futures? Did you know that when it goes down, you can make money? Doesn't have to go up. So when your large chart says down, when your large chart has momentum, when the large chart has a clear path, notice how I keep beating that horse to death when the large chart rules are met. On the small chart, you're going to wait for an up bar when everything's going down. And the up bar is not a reversal. It's just the beginning of a little pullback. And a pullback is a small move counter to the underlying trend. You know exactly where the retracement is most likely to go using those large trigger lines. You know precisely where the market is most likely to bounce using areas within. Your job will be to activate a limit order just below the lowest point of resistance closest to the reversal bar and hope that they come get you. And if they do, you're in the highest probability trend trade you could ever take. And you understand that anything beyond the triggers, anything above those triggers, you don't know if, when, or where the market is going to go back down. And guys, this is where the advantage of rule number 3 is lost. Are there any questions about entries, guys? It's just a pattern. It's a pattern that you can describe with words to make sure that you are consistent 100% of the time. And if you use the phrase, I will buy or sell a pullback at an area inside of triggers, guys, you will call your shots and never hesitate. And because you've identified where the market is most likely to continue, because you learned that simple little phrase, you understand completely where the market shouldn't go if this is going to be one of those winners, guys. And your initial stops are placed where the market should not go. 5 ticks above those triggers. 5 ticks, that's it. About 50 bucks. And what you're saying is, if the areas inside of triggers don't stop the market, if those trigger lines in the retracement zone are not effective, I no longer want to be in that trade. My advantage is gone, my edge is no longer in place. And guys, anything that wins 70 to 80% of the time will lose 20 to 30% of the time. And 20 to 30% of the time, 2 to 3 times every 10 trades, you will take a loss. Now, probabilities and predictability is based on consistency. So if your rules are met and you choose not to take the entry for some reason, you're affecting the overall picture, guys. If the rules are met and you choose not to exit, or you choose to enter on the wrong side, guys, you're affecting the probabilities. So consistency is key. The cool thing is when the market confirms the trade with a reversal bar in the direction of your overall trend, you'll reduce risk even further. And it's not uncommon to see you guys take these amazing entries and have maybe $30 or $40 of risk once it starts to move in the direction. And if it doesn't move in the direction, guys, you guys are going to say things like, come and get me. They're going to have to work to take my money. And if they do, it's okay. The next one is going to set up. And guys, that's the high probability trend trade. It's just a pattern. This is your pattern on both charts. When the large chart says up, we're looking to go up with it. When the large chart has momentum, we're looking to capitalize on that momentum, to go with that momentum. When the large chart has a clear path, or at least 3 triggers through, we're going to go to a smaller, faster chart, and we are going to define with amazing precision where the market is most likely to bounce and continue with all of the advantages. And with a little bit of study, there will be no question that that pink line off in the distance is where the market is most likely to go. That's where the market has the potential to stop, and that is an outstanding spot to take profits. And guys, you can study this pattern by going back historically. Circle those tails on a large chart when you have momentum path in it, when you have momentum and path. If your circle lines up with the phrase pull back to an area inside of triggers, this is your pattern, guys. And the cool thing is your pattern is consistent. And I like to do this. I've started doing this. Perfect trend trade long is what it says from the spreadsheet. And the perfect trend trade long was momentum. It was 3 triggers through, and it was a pullback to an area inside of triggers. And guys, this is from 2021. This is crude oil in 2021 that I stole this from a user and used it as an example. And let's just check another one. Strong triggers, room to trouble, pull back to an area inside of triggers. This is 2023. This is 2 years later on a different market. The S&P was trading at 3,800 back then. But the pattern is the same, guys. So I'm going to encourage you, don't focus on the money as a brand new user. Don't try to make all the simulated money to buy a simulated house, have a simulated girlfriend. Guys, focus on the pattern, the process that yields results. And once you understand it, doors open. Any questions? That's your high probability trend trade, guys. Mark, question, and no, I'm not trying to break rules or get trading advice. Can we trade momentum of the small 1 minute chart when it shows up? For context, large chart, small triggers pointing up, but small chart going down with strong momentum, counter trade. What say you? I say do your homework, study it, decide for yourself whether or not you're willing to do that. Show me a picture of what you mean. And when I go through charts, we'll talk about good and bad. How's that? No, Ron, that's a one-time deal. So Victor, let's do it this way. Victor says, hey Mark, if everything says up, how do I go down? Right? If everything says up, can I use momentum to go down? The answer is yes, Victor. You can do whatever you want. I know. So Victor, I'm going to translate, and forgive me if I'm wrong. Victor says, I have rules that when this chart says up, when this chart has room, when there's nothing in the way, when it's perfect and life is good and everything says I should go up with it, how do I go down? How do I take a short trade, Mark? How do I fight everything good to take a short trade? Well, Victor, I don't have rules for that. What if you just waited for the perfect entry, for the higher probability entry? What if you just waited for the pullback, for the close above, and just rode that trade up? The futures markets trade billions every day. There's a path of least resistance. Victor, take a momentum trade if you feel compelled to, right? But rule number 1 for a momentum trade, as taught, means that this chart has to be strong up with nothing in the way. And there's a reason, guys. There's a reason that I say trading with the large chart. You're going to see a million opportunities and a million ticks that may not be your ticks, may not be your money, because your money should be the consistent highest probability money. And if that's how it's taught, Victor, everything is going the same direction. Everything is going the same direction. Now, Victor, it doesn't mean that there's not a trade in there, and I see people take them. But Victor, what you're going to have to do, because my job is to teach the most basic, my job is to teach the highest probability, you're going to have to go back and you're going to have to find pictures. And from those pictures, you're going to have to describe exactly what you see and exactly where you would enter and why. And you're going to have to prove to yourself that it wins more than it doesn't. But it's Friday, so it's story day. John Novak had a broker back in the 90s that said, hey, John, figured out how to put $1 million in your account. And John said, awesome, how do we do it? And the broker said, here's how. Put $3 million in your account. And every time the market's going up, try to go against it short. And every time the market's going down, try to go against it long. Fighting the trend should have you down to $1 million by the end of the year. That's a true story. It's a funny story. So Victor, there's 1 million opportunities everywhere. There's 1 million opportunities everywhere. You don't have to catch all of them. So, but I do believe that that you're onto something. So as we go through and see examples, Victor, I'll throw out little tidbits for you to think about. But let's learn how to use TradingView real quick, guys. It is 2 charts, just like NinjaTrader. It is big time frame, little time frame, large crowd, small crowd. Your big chart leads the way. It defines direction. It will define momentum. It typically defines targets, and it will define areas that could stop the market. No different. It just looks different. It's a 15-minute bar. It's slow. A lot can happen in 15 minutes. Your 1-minute chart defines the immediate strength of the market. Victor, that phrase is going to be important if you're going to find these counter trend trades. It defines the immediate strength of the market, not the overall strength of the market. It defines your entry points. So knowing where the rules are met is important. Knowing where the advantages come from are important. TradingView uses mid-bands, 1-to-1s, divergence highs and lows, all of the same areas that you're going to see on NinjaTrader, except Fibonacci support and resistance. The programmers have not figured out how to put it in yet. That's okay, they're working on it. Until then, there is a company called ChartPrime. There are free versions, I'm going to tell you. I haven't found anything better than ChartPrime for using support and resistance. These will behave as fibs. And because it's a slow chart, we're going to read it different. And Victor, I want to say something real quick. And guys, again, anytime I say something, and if it feels directed at you, it's never with malice or animosity. But Victor, you have been finding a lot of success with a very basic plan. You have been very consistent. You keep posting how much closer you're getting to your goals of funding your prop firm account. Now, have you noticed that because of that success, you're starting to look for more? Suddenly the success isn't enough. Now I want more success. Suddenly $800 a day isn't enough. Now I want $1,800 a day. And this is one of those things that happens as we begin to find success, guys. We start believing that we're entitled to more, and it only takes $400 a day to be in 6 figures. Keep that in mind. There is billions of dollars traded every day. You don't have to have a lot to be rich. Let's read a large chart. The large chart will define direction, guys, and it's going to do it with the small triggers. You'll notice that I don't even have large triggers on this chart, guys. I don't even have background colors on this chart. If the small triggers are down, I'm looking to trade down with them. If the small triggers are up, I'm looking to trade up with them. This is the easiest way to stay on the good side of things. Once I define direction, I'm going to ask myself this very important question. Where is current price in relationship to those small triggers? So guys, Small triggers are right here. Just pretend like they extend off into the distance. You're offended? You beat me at the golf course. You know what? I hope you do. I would love to play golf with you, Victor. Guys, where is price? The current price, not the close of the bar, not the tail, not the body. Where is the most current price in relationship to these triggers? And there's three options. There is price left of the small triggers. And guys, that's the strong side. That's the best side. That's the giddy up side. That would be odds favorable momentum. If price is to the right side, this is the weak side, guys. This is where you're at before markets reverse. This is where you don't have that super heavy strength trading. Victor, wink, wink, nudge, nudge. This is where the 1 minute chart can take control of the shorter moves from the weak side of the triggers. And then there's the transition side. It's not really a side, it's the transition inside. It's inside of the small triggers. It's neither strong nor weak. Now for the brand new user, if those triggers are up, you're going up with it. Weak side doesn't mean you're looking to go short. Strong side doesn't mean that it's all up. But knowing where you are in relationship to those triggers is going to help you manage. If I'm on the strong side, this is where my small chart areas are more likely to break. If I'm inside that transition, I'm going to manage a little more assertively. I'm going to be ready to get to break even. And if I'm on the weak side, I'm still looking for long trades, but I'm probably getting paid at 1 minute areas, making sure that I'm not being that I'm not looking for home runs from the weak side. So 1, 2, or 3 just lets me know how to manage. And then the most important question, right? We couple momentum with path. Is there anything in the way? If I took an entry right here, do I have room to make money? My personal plan, my own trading rules says that I have to have at least $100 worth of profit. For some people it's 200. For some of you, I see it's like 18 cents. You're going to have to decide what room to targets is for you. Mine is a minimum of $100 on either chart. Once you have your read, and guys, give me a Y if you're with me. Up, strong, room to targets. It's time to go look for an entry. It's time to go to the small chart and say, hey, let's make some money. There are two types of entries. Now there's a momentum style entry. This is the one on the left. I hope that division's okay. The entry on the left has strong triggers, smalls above the large, space between, that odds favorable momentum, guys. So that lesson carries over from Ninja Trader. Separation is strength. Your large chart will also be on the strong side. It has to be to take a momentum trade. This is the only time where you will use a limit order, guys, and you'll literally let an area break, and as it snaps back and retests that zone, the HVA, 1-to-1s, you will enter right at that zone, right at that HVA, right at that 1-to-1 with a limit order. And guys, you're hoping that all of the momentum on both charts is carrying you in the direction of the trade. This is probably 20 to 30% of the trades that you will take, is the momentum style trade. The more common trade is the trend trade look. And the trend trade look means that the smalls are not separated on the 1 minute chart. And usually the small triggers will actually turn against you. And because they turn against you, instantly I want you to say, I have to wait for a pullback to an area, to a zone, to a mid band, to 1-to-1s, something solid for that market to bounce from. And then I'm not just going to enter, I'm going to let the market close on the weak side of those triggers that are against me, to the right of the triggers, above the triggers for a long, below the triggers for a short. And guys, this entry is one of your most common entries. And this entry typically is where the market, if it's going to go, where it starts railing in the other direction as soon as it's not fighting. And Victor, it's an easy trade, isn't it? It's easy to recognize. Very often you have 7 or 8 minutes before it gets there. You know exactly what you're waiting for, exactly where you're waiting for it. So I've got checklists, guys. The momentum trade. This is on the KISS plan that I gave you. No terminations on the 15-minute chart. Guys, room to targets is so imperative to your success. These areas are outstanding in calling potential turning points. There's no reason to ever trade into them. 15-minute strong side of the triggers. It's mandatory. I can't take a momentum trade without momentum. 1 minute strong triggers, separation. Any pullback to an HVA line or area for entry. Jesus. And guys, if you can mark yes, all three, you have a momentum trade. And it's going to look just like this. And when you take it, this is what I want you to be able to write on your chart and test yourself, police yourself. The smalls are up. I'm on the strong side of the smalls. There's nothing in the way. And look how the market breaks and then pulls back. When resistance is broken, it behaves as support. Guys, I see a lot of people jumping in right here, hoping that it smashes through. And very often, there's a dance. They're making decisions. So break and pull, limit orders waiting, ride that momentum. That's your momentum trade. Same look every time. Now here's your trend trade. And gosh, here we go again. 15-minute not trading directly into one-to-ones, divergence, highs, lows. Room to targets, guys. 1 minute's not trading directly into 3 divergences against a zone, right? Room to targets. Buy or sell a close on the correct side of the triggers at a 1 minute mid-band zone or area. So when the large chart is up, and in this case, guys, it was transition. It wasn't even strong. It was transition. And I have to have room to targets. And right up here at the zone, and once again, why don't we just let it peak? Because even with momentum, just peaking without the break fails often. The small triggers turn against you. It pulls all the way back to one-to-ones. And there is your close on the correct side of the small triggers. And that is where the market continues up with the trend. Your trend trade entries are going to be the most common entries, guys. Your trend trade entries keep you from getting run over. And guys, a close on the correct side of the triggers, not from an area, you are more likely for that market to come down and reach the area. Only 2 trades, guys. 2 trades with 3 items. That's it. So let's do a large chart read. Just for fun. And I'm going to pause it and freeze frame it. You get giddy when you see that setup. It's like money is coming. I agree. So guys, small triggers. What do you think? Up or down? Play with me. They're up. Darn right they are. All right, where's the most current price? Here it is right here. And let me show you a cool little trick. If you're not sure, extend those trigger lines in your mind. Are we strong? Are we transition? Or are we weak? Pablo nailed it. Strong side. And now here's the question from the most current price. Do I have room to targets? And guys, I'm seeing from the most current price 3.5 points. That is $70. That is $70 from where it's trading to resistance. If $70 is in your plan, outstanding, right? Go look for an entry. My plan says don't bother. It's not worth your time. Well, I can't see the current price, Victor. So if you took a momentum trade, it didn't have anywhere to go. No room to targets. And guys, one of the hardest things that you'll ever do is this right here. You ready? Some of you know exactly what's coming. I don't have room to make money. I'd rather do nothing than let this small chart talk me into a trade. Hardest thing you'll ever do. I couldn't get off of the large chart. I'm not even going to look at my small chart. Triggers rolled, didn't they? Now, Victor says, now we've got some room, right? But Victor, they may have already reached their target. If I get a close on the correct side of the triggers, I want to make sure I've got room everywhere. Does that make sense, guys? That could very well be a top. I don't know. So if I trade back to it, I'm going to make sure that I've got every advantage I could hope for. Guys, that's it for the chart read. It's the same no matter what. Oh, and here's a great example. If you look at your large chart and you're like, son of a gun, is that up? Is it starting to roll up, guys? Is it still down? Is it the potential for up? Have you ever looked at your large chart and said, egads and little fishes? I'm not sure. Does that look familiar? Have you guys seen this before and wondered what you were supposed to do? If I'm not sure if the trend is up or down, how can I possibly trade with the trend, right? If I can't tell if it's up or down, how could I possibly trade with a trend if I can't identify it? And Andy said it. Sit on your hands. Sit on your hands. Auto keyboard and mouse block. I like it. And guys, that's okay to do. It's okay to do nothing. So that's my first hour. 9:59. Pretty cool, right? In the first hour, I'm gonna do highlight reel. We have talked about the rules for 2 platforms. So if you're on NinjaTrader, guys, you have a very solid set of rules. You have a very well-written plan that gives you a checklist for entry, that even helps you with management, that gives you a second trade and how to manage it, and it reminds you that you will build a plan based on your own simulator practice feedback, and it will suit your needs. Until you can do that, if you're a NinjaTrader user, let you in on a secret that nobody has ever followed this to the letter and done worse than 70% in my history. Nobody has ever been able to follow these rules and do worse than 70%. Most of the feedback that I've gotten is mid-80s, low 90s. But that's to the letter. The more you deviate, the lower that number gets. Trading view plan, same thing. It's a stepping stone, guys. It's the beginning. Victor's like, Mark, how do I use small chart momentum even though the trend is up to catch it down? Victor, through study, simulation, class feedback, and practice, you'll write a plan that suits your needs. And if you choose to take that trade, I would encourage you to create a checklist to make it 100% consistent and testable so you know whether or not you have an edge as you're fighting that trend. Guys, there's a lot of success found counter trend trading, but it's rarely fighting both charts. So Victor, if you need help with that, if you decide to go that route, take a lot of pictures, post them in the room. We'll talk about all of them. Guys, I'm not so pompous to believe that this is the only way to make money. My job is to give you the best way, the easiest way, the lowest risk, highest probability way so that you can create your own trades, so that you can write your own rules. And as you develop your own trading plan, guys, I encourage you, share in the room, let me help. I'll give you everything I have. So we learn the rules. Everybody in the room can simulate. There's no reason to risk money. You can post in the room everything that you see, everything that you do, every question that you have. If you walk away from my classroom wondering what something was, guys, it's on you. I take no responsibility for that. It means that you didn't have the courage to ask the question. Ask them all, because I promise you there's 36 people behind you with the same question. It's just a matter of who's got the confidence to do it. I'm very, very laid back. I'm very warm fuzzy, guys. I will never beat you up. I will correct, but everything I do is in the interest of making you a better chart reader and a better trader. You can simplify. Everybody has a plan now. If you walked into this room without a plan, you now have a plan. You have a plan for NinjaTrader, you have a plan for TradingView, you have spreadsheets with a bajillion pictures so that you can learn the looks. Now there's one thing that I didn't provide you guys today, and I never have. In my history of teaching the room, I've never given this one thing, guys. I've never given you the experience for it to feel easy. I've never given you the repetitions for it to feel easy. I've never given anyone in this room the desire to do the work to make it easy. But I'm going to tell you, the people that do the work, the people that take the pictures, the people that annotate the charts, the people that keep it simple, these are the people that are finding success, guys. The people that post the most typically make the most money and make the fewest mistakes. So you choose what your path will be. I won't cry if you don't get it after 10 years because you refuse to follow a plan. That's on you. But I'm going to tell you, there's an easy way to trade this software. And it's trading with the trend. And it's trading with momentum. And it's waiting for a pullback to an area and a close on the correct side of the triggers and just ride that mofo down. That's the path of least resistance. Learn it. You'll be floored. And I'm going to take a break. But before I do, this is crude oil. Let's do a chart read, guys. Do I have momentum? What do you think? And here's the cool part. If you're mistaken, I won't even say wrong. If you're mistaken, we'll have a lesson. Miss Kathy, 100%, you don't have momentum. Do I have a clear path, down or up, without that momentum? Maybe I'm like, I'll trade without momentum. Let me make sure my path is clear. Not at all. Is there anyone in the room that's saying, but Mark, there's an area inside of triggers? Guys, the small chart is the siren song. The small chart will seduce you and tempt you. The small chart will try to talk you into absolute garbage trades. If the large chart's not giving it up, guys, it's okay to sit on your hand. But if the large chart is giving it up, there's your pullback to areas inside of triggers. And if the large chart is giving it up, there's your pullback to area inside of triggers. And then Ron, a high probability trend trade is not your get rich trade. It is your learn how to read the indicators trade. Once you have high probability trend trade down, Pat, you will see other trades. Ron, you owe you a nickel. One day I'm going to send you a dime. I'm going to go into the Nexgen files, get your address, and I'm just going to send you a nickel one day, and you're going to be so happy for the mail. All right, guys, here we go. S&P, do I have momentum? The colors don't match. I'm going to make it easy. Do I have momentum? The colors don't match. No. If I were looking for a trade, I've got room up. All my triggers are above support. All of my triggers are below resistance. Now, guys, I'm going to show you the only termination condition when I have momentum and path that I accept on a small chart. And this is a beautiful example of how you can use it to manage a trade. That was your high probability trend trade entry, guys. It's at 0750. That trade went all the way up to 1125. And it came right back and bounced at the exact same areas inside of triggers. And it went right back up another 2.5 points. And then this third divergence printed. There's one termination condition, guys. There is one time on a small chart where I will choose to not take that next entry inside of triggers, and it's 3 divergences in the same price range. 3 divergences in the same price range is the small chart showing you change that you cannot see on the large chart. 3 divergences on the small chart is the only small chart termination. 3 divergences on the small chart, have I said it enough to help it stick? is the only time when I have momentum and path I choose not to take that trade, because three divergences in the same price range may terminate the trend. And it becomes even more powerful when the third divergence happens with the small triggers inside of the large triggers. Remember weakness? And it becomes more powerful still if the final pivot is higher than the previous from a low or lower than the previous from a high. So not only did we get three divergences, we got three divergences with weak triggers, and we got three divergences where the third was lower. Guys, this is a great pattern to keep you from getting run over. It doesn't mean that it won't go up. It just means that you're not sure when or where it may. And guys, that's the first hour. Yeah, I am that guy. I am that guy, Victor. I have trouble saying goodbye. I get excited about the lessons, and when I see a lesson, I don't want to. Guys, I'm not union. I don't take breaks just because it's a certain time. I take breaks when it's appropriate. And if there's something to talk about, we're going to talk about it. And if it means that we have to stay late, I'll stay late. I don't mind. I do. I love what I do, Victor. And I love seeing you guys find success. My wife knows every one of you in this room. My wife knows when you guys take great trades, because I see her in the evening. I'm like, oh my gosh. Cherry had answered my questions in the room and made sure I wasn't alone. And Ron created the chili dog. And Ron, she likes you best. There's no doubt about it. I think that's why she wants an East Coast contract, so we can come up through Myrtle Beach, take you to lunch. All right, guys, I'm going to walk away for real. I'll be back in 5 minutes. 5 minutes? It felt like 5 minutes. Market's still not going through that area with no triggers, right? Remember when I said decisions are made at key areas? Does everybody see the fight between buyers and sellers there? The buyers are pushing up, the sellers are pushing back, the buyers, the sellers, the buyers, the sellers, the buyers, and it's all happening right at a fib. Now, this is why your rules say don't trade into a fib. It's just churning. Somebody's going to win, right, Pete? Somebody's going to win, and when they do, we'll take advantage. We'll let them do it. Oh, this feels like a Norbert moment. Guys, when you're waiting for a trade, what you're doing is you're reminding yourself that you're not in charge. You are a remora. And this upset John Novak once. He's like, we're not bottom feeders. And guys, being a remora is not being a bottom feeder. Being a remora is being opportunistic. It's letting this guy do all the work. It's letting this guy, I think it's a lady because of those fins, letting her eat a tuna, and you get more tuna than you could ever handle. Let them do the heavy lifting, guys. And that's kind of the idea behind the methodology, is that when you let somebody else create the advantage, when you let somebody else establish that momentum, when you let somebody else react at those areas, all you have to do is just kind of take advantage of all their hard work. And I guess that sounds horrible in the big scheme of things. But by letting other people take the risk, right? By letting other people be the first one in, by letting other people react at the area, what you're doing is you're just taking yourself out of the fight and going with the flow. And I'm just trying to ramble while I click on everybody's pictures so that we can go through and make sure that every question was answered, and that everybody gets feedback, and that life is good and children are singing songs about you. Almost there, guys. And this allows me to stay active in the chat box as we go through and do all the chart reads. Almost there. Almost there. You guys are busy. All right, guys. So here we go. Like buying a used car and letting previous owner take the tax hit and depreciation. There you go. Okay, guys. So we're going to go through and we're going to start talking. And I love the annotations on this one. 3 triggers through, odds favorable momentum, pull back to the area inside of triggers, and only 1 profit target hit because of all the fibs. Quick money, great management. Oh, that's the same picture. Here we go. Aren't these one-to-ones, magenta, more powerful on a small chart? No. So these one-to-ones, guys, are what we call small swing one-to-ones. The yellow ones are large swing one-to-ones. So while the yellow one-to-ones here are a product of huge swings, the small swing one-to-ones are products of smaller swings. And on NASDAQ, like Andy's trading here, on the NASDAQ, those pink one-to-ones are every bit as powerful as the yellow one-to-ones. On something like crude oil or the S&P, guys, I don't pay much attention to them. Now, second target is set just below previous divergence on the large chart. Took most off here in long. So this is where, again, where I was going at. Annotations. How do I make in long repeatable? How do I make in long repeatable? Because in long could have happened here, or here, or here, or here, right? In long could have happened here. In long could still happen right there. How do I make in long repeatable, guys? So when you go through and you take a trade, rather than saying in long, say went long because the large chart had momentum, because the large chart had the potential to break, I'll take a pullback to an area inside of triggers with momentum. And what you're doing is you're writing that recipe. And Andy, thank you for posting this so that I could do this, right? So Andy, the question would be, why did you trade directly into resistance, right? Why did you trade into a termination condition? Because you want that to be repeatable, right? Because there's different looks trading into termination conditions. Why was it okay here? Why wasn't it okay here? Why didn't you take that pop into it, but you're willing to take... So, guys, do what you want to do. I'm not going to force you to work, but I'm telling you, if you go through that process on every trade, if you talk about the whys, it becomes repeatable. And you get to a point to where you associate what you see with what it means to you. 2 ticks away from a strong top, triggers roll, down, separated, odds favorable momentum, clear path to target. Pete has no misconceptions about what it's going to take to get him to look for an entry. Entered beneath the fib and midband, half off at 10 ticks, balance off at target. Is there anyone in the room that couldn't take this picture and replicate this trade based on the annotation? That's what I try to do. When I annotate a chart, I pretend like I have to teach that trade to somebody. And that trade has to be testable and repeatable. And Pete, you did a great job of it there. And then over here. 1 tick away from a strong bottom, weak triggers, things roll, enter just above the fib. I mean, barely above the fib, right? And get paid on the way up to trouble. And I'm not sure, I'd have to line this up. So you are in right around 87, which puts you in before trouble with momentum, and you rode that momentum to trouble. Outstanding. Momentum and path, guys, having room to targets so that you can manage if those targets hold. And that's exactly what Pete does really well. Until this one, where he tried to take a momentum style jump in without any momentum to push it. Gotcha, Pete. Market reversed, odds favorable momentum, potential to break, and then Pete, this is a much more successful look if your small chart has odds favorable momentum as well. I love your getting in belows, but when it has momentum, it's less likely to pull back and turn into a trend trade. But it did pull back and turn into a trend trade, and Pete's a freaking rock star. And Pete says when momentum trades fail and the large chart supports it, they typically turn into trend trades, and he enters right at the area inside of triggers and makes his money. Does that make sense? So Pete, this is one, because no momentum, you could just go 4 up here and quadruple your money instead of making a couple ticks on these two. And watching for those strong triggers, it creates a huge advantage. But still, outstanding trading based on large chart advantages. And guys, Pete knows what he's doing. He knows what he's looking for. But every now and then, somebody from the outside is going to see something that you don't. I got corrected yesterday, and I loved it. It made my day. Because I took a trade, and price didn't reach the area. It got close. I played a little horseshoes and hand grenades. And someone in the room goes, "Ooh, Mark, that didn't make it to an area. Did you notice that?" And I was like, I don't think I did in the moment. Thank you. And guys, that's pretty cool. So if you ever catch me, get me, without a doubt. Pete, all the momentum. You sure do like momentum. And potential to break. And then Pete, check it out. With strong triggers, it pushes. Big difference. I think that's cool though, right? With weak triggers, you get the retracement. With strong triggers, you get the paycheck. It's so subtle, right? It's such a small difference. Large charts looked exactly the same. Small chart had one difference that's identifiable, that's repeatable, that creates an advantage. Pete, outstanding trading this morning. Thank you for sharing all those, man. If you guys see the X next to Pete's name, Pete's been with Nexgen for 10 years. There's a reason he hasn't left. Because he likes the sound of my voice. All right, Andy. Smalls are down. Transition, I love it. All the room in the world to targets. You get the pull back to the outer band which qualifies as an area. You get the close below the small triggers, and you take it down, and it looks like about $150 is where it went. And you said need better management. Andy, are you with me in here? I'm going to show you guys something that I'll use for management, Andy. And it's a pattern. It's all it is it's a pattern. And let me know if this is helpful. And stopped out. And I'm going to try and help you gather a little extra. So first you get a close on the wrong side of the triggers, which is a little bit of a slowdown. Does that make sense? So I'm always watching that. But you didn't have any reason to exit, Andy. You had strong triggers. You had nothing in the way. There's no reason to believe that market's on its way back up. True story. What I'm going to look at on this one, do you see the high volume area on that breakout bar up? Those two white lines? So here's a little pattern that you can maybe incorporate at another time. If the next bar opens above that high volume area, the market is more likely to push up than down. So great opportunity to reduce risk, and that's what you did. I think you managed it beautifully. But that's a little pattern that helps. And then the other thing that I like to point out, you did take profits. You took first profits at 78.2, which is nice. That is, oh my gosh, it's math. That's $150. And then with this right here, being able to get to break even because of the pattern, not necessarily exit, but using that little red flag, that little pattern warning to say, I'm going to get to break even and not give anything back. Does that make sense? And I think that's a great way to use those bars in management. It doesn't mean exit, right? Nothing says exit, but it says let's protect the position because now I can see that pattern. I love this trade. I love this picture. And what a great lesson for everybody in the room. Thank you for sharing that. All right. And then Andy, we're doing that little lesson with all the momentum and everything screaming up. Andy took a momentum trade right here, and it's beautiful. And it's all the momentum, it's strong triggers, and he gets in right on the snapback to the fib. And guys, this is textbook rock star momentum trade. But Andy's saying, what about the triggers, Mark? I know there's something about entering when the triggers are a full bar away, getting in at the area. And Andy, I think one of the good lessons on this one is that if your triggers are up, you can't fight them, right? If you're going long and the triggers are already up, it's not a fight at all. If you start swimming downstream, you're not fighting the current, you're going with the current. And I don't think that really applies on a momentum trade because you've got the strongest triggers ever. And Andy, dead to rights. What a beautiful entry. And your targets make perfect sense. Get paid. We're here to make money. Get paid again because it could stop the market, and when it didn't, get paid again. I love everything about this trade. Everything about this trade. All right. There's the momentum directly into a termination condition. So Pete says, and this is cool because guys, we're all human. Pete says 50-50, meaning that the large triggers are above and the small triggers are below. And he's pointing beautifully right to that fib. Now, what did Pete miss? Pete was so ready for that short trade that he forgot to look at this fib. And price reached that key Fibonacci area, and none of his triggers broke through. And the part that Pete missed was that he traded directly into a termination condition. Now what Pete did is he said with all this momentum, he took the perfect entry. Andy, this is your entry going the other direction. But because it's directly into a termination condition, it just didn't go anywhere. Just fizzled. And it was just a lot of sweat. And you found a way to get paid, Pete. But sometimes you guys will annotate that it has the potential. Sometimes you guys will annotate that it's a clear path. I never call you out to try and say, oh, damn it, Pete, you're so stupid, right? But I say, hey, I want to make sure that you saw this. I want to make sure that you remember that looking at the lowest area that's been hit, that's a part of the equation. And because of your amazing entry, dude, you made money. You still made like $120 on this trade. On a trade that failed because of your great entry. So let's celebrate victories too, right? All right, the lemon trade. When the market gives you lemons, you make a little lemonade. I love this. Triggers are up. Yep. Price is on the weak side, but plenty of room to go. So, Victor, I like that now you're like, hey, I know I'm on the weak side, but it's still long trades, staying focused on the trend. The 1 minute chart pulled back to the zones, back to the areas. There's your close above triggers. No room, none whatsoever, but you made a choice with the close on the correct side, and it goes right up, and it's beautiful, and you're right at trouble. And remember, Victor, on the weak side, it's all right to get paid, and you did it, and you protected your investment, and you said they can either go up or go down, I don't care. Nice trade, Victor. $150, right? $150. Do it 4 times a day. You'll never work another day in your life. The rinse and repeat trade. Small triggers are up, price on the strong side of the triggers, space to the next trouble area. Small chart entered with a close on the correct side of the triggers. Didn't have a zone though, did you? You weren't trading from an area on this one. But what you did do is you said, since I don't have anything here to bounce off of, let's get to the good side of this one with everything going up. And sure enough, from the strong side of the triggers, it just goes up. Great job. Nicely done, Victor. Do you really need to go counter trend to make money in this market? Just throwing that out there. Andy, 4 triggers through, all the momentum, clear path, pull back to an area inside of triggers, getting paid. Andy, it's like I don't even know you anymore. Your patience is outstanding. Your chart read has been absolutely off the hook, and your entries have been amazing. And guys, one of the things that people don't tend to do is celebrate their own victories. And Andy, you have this calm about you lately. That's really cool. Nicely done. My 2 large charts on ES and CL. Ho hum. Sit on my hands. Just nothing to do. Man, I'll tell you what. I had someone tell me if I'd play golf stoned, I'd probably do a little better. I'd relax my swing a little bit. I can't bring myself to try it though. All right, large chart is good. Worth a try. Yeah, it's legal here. It's legal here. I would just have to Uber. I'm the worst stoner ever. I'm not sure. I might just sit on the green and eat. Large chart is good. Small chart. So when you say large chart is good, it's up, clear path, nobody cares. Nobody cares anywhere, Ron. No, there's a few people, but not many. Small chart had a reversal, waiting for price to close on the right side of triggers, but too many roadblocks, yellow 1-to-1s, pink 1-to-1, supply and demand zone, outer band, another supply demand area, and prices bounce between those areas 6 times. Hate it and love it. Hate that I'm not busy, love that I'm not losing money. Great patience. Great patience, Victor. Next one's coming. This looks like one of Miss Kathy's, because I love this. Odds favorable momentum, yes. Clear path, absolutely. I love it. Entry, well guys, you've got to read Braille for her entry. So Miss Kathy, with all the momentum and with nothing in the way, you said, I saw Ron do it, I'm going to jump in and ride that wave of momentum. and try to take quick profits. And you said you got stopped shortly after with $100. Nicely done. Can I let you in on a secret that Ron taught me? If all you're relying on is straight line momentum, small targets are amazing. Small targets add up really, really fast. $110 trades a couple times a day is more than you'll ever spend if you merit on a couple accounts. So really nice, perfect execution. Great job making money, Miss Kathy. And guys, that's a great trade. Hey, Norbert. They're trying, but it's ugly. 3 divergences again. Does anyone else find it interesting? Maybe this is just me. Does anyone else find it interesting that huge fight is dissecting a fib? That giant struggle between buyers and sellers is happening right at a Fibonacci area? I think it's amazing. I hate to admit my brother is smart, but man. Miss Kathy, how did you get stopped out of that trade? For $100. Oh, you were on a different market. That was gold, not the S&P. Never mind. We're good. I gotcha. Great trade. Andy V, triggers up. Entered at trouble on SC. I don't know what that means. Entry was 36.85. You took the HVA, and it just didn't really have anywhere to go. And 68 bounced, just like we thought it would, huh? 68 bounced just like it said that it would. And I think you said pay attention, right? Profit target should have been right at the bottom. You got to manage. Manage. Great entry. Beautiful entries. You're in at 86.5. That's $150 to get to trouble. It's a great trade, Andy. Management is harder than entries. Did you guys know that? Did you guys know that the entries are easy? That finding the pattern isn't difficult? It's what you do with it. So a trade is momentum, absolutely. 2 triggers through. Not from a strong top. Divergence on the 5-1. No entry. Right on. And yeah, that's a $300 trade. I was talking to someone yesterday, and they were talking about, and it was really cool. On TradingView, he started recognizing the momentum, and he started recognizing that little bit of room to targets, and he started recognizing on the 1 minute when everything is screaming in the direction. He's finding a way to capitalize 100, 150, do it on a couple contracts. And what he's doing is he's really figuring out the chili dog on TradingView. And who knows, maybe he'll share some charts in the room one day and give you guys something to look at. But Miss Kathy, great job. Rules weren't met. You chose not to trade. It's hard to do that. It's hard to do that. And you did it beautifully. Chili dog, chili dog. Odds favorable, nothing in the way, just bada boom, bada bing, I believe they say. Guys, when you have a freight train and there is nothing in the way to stop it, and both charts are sharing the same sentiment, outstanding, Pete. And everything that you didn't do here didn't detract from all of this awesome. Nicely done. Andy Man, details, just took this loser, wasn't paying attention to the previous divergence, too excited about 3 through, odds favorable momentum. All right, so Andy, there's a couple things that show up on this one. Can I share my 2 cents? Cool. 3 triggers through, right? So we're going to go back and we're going to take a page out of Miss Kathy's book. And guys, this lesson is for everybody, not just Andy. But we're going to take a page out of Miss Kathy's book because I absolutely adore that she does this. So if the perfect trade is momentum, clear path, and entry, right? And guys, all we're doing is we're saying I know exactly what it looks like to have the best of the best. We're not necessarily shackled to that, but understanding what's good and what's bad sets us up for management, sets us up for deciding on entries. So Andy, let's see if we can blow this up a little bit. There we go. Try to make this as easy to read as possible. Sorry, Pete, I'll get it. Thank you for that. So Andy, 3 triggers through, right? Morning, John Novak. But let's start at the beginning. The first one is momentum. And without question, it's beautiful. You've got strong triggers. The odds are favorable for the market to continue up. Guys, strong triggers always leads the way for a reason. And then Andy, you said, check it out. I've got 3 triggers through. And you did a great job on the analysis. And the one thing that I want you guys to do, 3 triggers is the best look for a potential breakout. But it's only potential. It's not a clear path. Does that make sense to everybody in the room? 3 triggers through pulls us out of the high probability trend trade realm. I want you to see how I do this because this is how I approach every trade that I take. So if I have momentum, but I don't have a clear path, it's very important to me that I have an entry area. It's very important to me that I've got an area inside of triggers. And Andy, you've got it. So on the surface, we're 2 out of 3. It's medium probability. All my NinjaTrader users, are you with me so far? Our challenge right now is a clear path. It's so important that we latch on to momentum. It's so imperative that we insist on the perfect entry. Now, the small chart begins to show us some things. So divergence on the small chart. Divergence is synonymous. Good word, right? Loss of momentum. So for this potential to break trade, guess what? We just lost the mo. And we're relying on momentum in an entry area. Does that make sense? Since it takes 3 divergences, we're starting to get rid of it. Now watch this. My small triggers are inside of my large triggers. Isn't that weakness? And if that's weakness, I'm losing even more momentum. And now it's entry area. And by going to those 3 concepts, guys, it helps a lot. Now in the KISS plan, it says divergence is a killer. In the KISS plan, it says that you must have strong triggers on your small chart to attempt the 50-50 shot. And now, Andy, one more great lesson. One more great lesson. And man, thank you for posting this. And this is going to go back to the lesson that you were asking about earlier. Check it out. When you reached your area inside of triggers, do you see how your small triggers behaved as resistance? There wasn't a full bar. They behaved as resistance. There wasn't a full bar. They even behaved as resistance right here. There wasn't a full bar. So guys, your 13.2 on the NASDAQ is a huge fast chart. So on the NASDAQ, and this is NASDAQ specific, if the small triggers are less than a full bar away, wait for the close on the correct side of the smalls. Does that make sense, Andy man? And everybody that trades NASDAQ. If the small triggers are not a full bar away, well, Mark, how do I know they're a full bar away? They will be above that reversal bar marker. They will be above that reversal bar marker. And if they're not, it's okay to wait for the close on the correct side. And Andy, notice that the market never even made an attempt to go up until it closed on the correct side of the triggers. That was the lesson that I had to learn about 100 times before I believed it. It was about 15 Apex accounts that I blew out trying to transition to the NASDAQ until I finally recognized the pattern. So I love being able to share that with you guys because that eliminated, Andy, probably 50% of my losers. Almost overnight. You were watching my class when it filled. Maybe you might have seen it. You probably would have. Oh, I know. But you'll never believe it until you understand it, right? So you'll never believe that the methodology is true if you don't understand the methodology. You'll never believe that the patterns repeat if you don't take the time to go watch them repeat. So Andy, we're just in that process right now of little tiny tidbits because your reads are amazing. You know where your entries come from, but the NASDAQ's a different animal, guys. The NASDAQ doesn't trade like the S&P. It doesn't trade like crude oil. I mean, momentum is momentum and path is path, but this is the large chart on any other market that you trade. And these strong triggers, these are strong triggers. It's hard to win that fight. Andy, I love everything about your trade. You did it textbook. There's just little things, right? Maybe the divergence, not the full bar away, and the smalls causing a push down. So the divergence is my first huge red flag. The weak triggers is my second huge red flag. So why do we get in at the highest point? Because we've got the best of the best over here. NASDAQ takes a little more practice, but I think that one rule, close on the correct side of the triggers, really does pay dividends. John Novak does it here. He's got the momentum, little bit of potential to break there, right? And when he pulls back, notice how he doesn't just get in. And Andy, this is a good visual, guys. This is a great visual for you guys. Do you see how the small triggers behave as support on the way up? It comes down, hits those small triggers, and starts back up. And John Novak says, whoa, pump the brakes. Let me get in on the good side of those triggers. Let me get in where things are more likely to go down, where I've got room in my targets, where there's not an immediate fight. And John Novak, I know you didn't annotate, but it's beautiful. You've got momentum. You've got two triggers through. You take the perfect entry, and I hope it worked out for you. John says he's recording his whole trading morning with the system and some discretion, good or bad, and narrating the whole thing. We'll make a kick-ass video for education. I love that, guys. When the guy who wrote the software is going to record his whole trading morning and tell you everything that he's thinking and doing, that's amazing. Andy, you and John both. Remember, he's 30 years ahead of you. Great trading, guys. Great lessons. Here's crude oil. Even with momentum, does everybody see that red fib didn't break? Pretty neat, right? And now we've got momentum and two triggers through and strong triggers and no divergence. And some of you are saying, hey, I may take a shot. Hey, Andy, have a great weekend, man. Have a great weekend. Love on that dog for me. Your puppies are cute. All the momentum. Three triggers through. This is the S&P right now. We're a couple ticks off that termination and probably not going to get a trade before it happens. Crude oil has triggers up. So guys, this is a good read. I like this read. This is crude oil right now. Do you guys want to do it with me? Are the small triggers up or down, guys? Let's play with me. Play with me here. Up or down? They're up. Strong, weak, or transition? What do you think? Weak, because they're on the right side, right? Now, how about our path, guys? Do I have a clear path for a long trade from the weak side? Victor says yes. Does anyone disagree with Victor? Guys, see those yellow 1-to-1s? See that giant red zone? There's nowhere to go, right? And if I take a close on the correct side of the small triggers, where's it going to go? Hey, Ron, have a great weekend, man. I appreciate that you show up and hang out even though you don't need us. Do you see the zone, the 1-to-1s? There's just nowhere to go. But that's why we don't just say, hey, I know how to read a large chart. Guys, the reason that I do this isn't necessarily because I don't know what's going on. I know exactly what's going on. But just imagine if you will, if every day as a brand new user, you stopped worrying about the money. And every day you did this. I'm not looking for a trade. Guys, what direction are the triggers going? Down. Am I strong? Am I transition? Or am I weak? I'm strong. The most current price is below trouble and hasn't reached trouble. Do I have room to trouble if I find an entry? Yes. Now imagine, if you will, you do this, right? And you take that picture and you go to your spreadsheet and you go to here and you say, hey, look, there's that darn strong side again, right? There's that rules met, look for entry. And then you close it out and you take that same picture 2.5 minutes later, minute and a half later. And guys, what direction are the triggers going? Repetition creates recognition. I'm going to force you guys to play along with me today. Up or down? They're down. Strong, weak, or transition? Strong. Room to targets, Andy? Whoop. There's your VWAP. Price is above the VWAP. I got 2 ticks on a short, Andy. So I'll ask again. Do I have room to make it to that VWAP if I take a short trade from 757.25? The answer is no. The answer is no, right? So that's how fast things can change, guys. You may have the rules met for a short trade, and then suddenly you don't. And you've got to pay attention to that because the market is constantly moving. The market is constantly going. All right. Up or down? This is the S&P. I guess I shouldn't cover the most current price. It's down. Strong, weak, or transition? Strong. Room to targets? No room. Not looking for an entry. Do you guys see? What if you did this right here 50 times today, or 20 times today, and 20 times on Monday and Tuesday and Wednesday and Thursday and Friday? And what if you woke up a week from Monday with 100 pictures where all you did was read the large chart without looking for an entry? Do you think you would be way better at reading your large chart? Do you think you would be more likely to not trade into areas? Do you think you would have a more solid understanding of how you need to manage these trades that you're taking? Guys, I promise you, there is a path to get to where you want to be. And for whatever reason, people don't like to do it. And look what not trading into the area just kept you out of. Isn't it awesome? And you still didn't have anywhere to go, and they're still not going anywhere, right? And you adrenaline junkies on gold. Let's do it. This is for you, Andy V. You're my gold guy. Up or down, my friends. Up or down. Man, that's easy. Strong, weak, or transition. It's kind of a weak trans. Weak trans. It looks like it may be trying to pop out. I'll always err on the side. We'll probably go transition on this one. But if I'm going to make a mistake, I'm going to make it against the advantage instead of with the advantage. Because I would hate to err on the side of strong and not manage properly. I'd rather manage it as a weak trade. Now, do I have room to trouble? What do you think? Room. Go find your entry, Novak. Right? And now, because I have what I need, I come over here. I've got odds favorable momentum and room to trouble. Do you guys see it? What's the first trade I could potentially take with this look? There's only 2 entries. And actually, that negates the momentum trade. So there's really only one trade I can take from transition, and that's a trend trade. And that means that I need my triggers to roll, and I need a pullback to an area, and I need a close on the correct side. And they haven't given it yet, but maybe they will. So that was 5 minutes of class. In 5 minutes of class, we did 1, 2, 3, 4, 5 large chart reads. Now, if you can't do a large chart read, I would encourage you to go through this process. I would encourage you to go back and say, hey, are they up or down? They're down. Am I strong or weak or transition? They're strong. Did I have room to get back to trouble from 66, where it closed on the correct side of the triggers, to 54? I had 12 points to get to the VWAP. And from the strong side, if I wanted to manage into that 1 minute area, I could, because my rules tell me every morning in Mark Novak's voice that when I'm on the strong side of those triggers, 1 minute areas are the most likely to break. Not guaranteed, but if I'm going to take a shot, that's the look to take a shot with, and sure enough, it's still going down. Trading doesn't have to be difficult, guys. Trading doesn't have to be overwhelming. Trading doesn't have to be a fight. It doesn't have to be counter trend. It's just taking trades that fit a certain criteria, and the criteria in a perfect world has been proven to win more than it loses. What a great lesson. All right, so you guys on Ninja Trader, what direction is the trend? Up or down? Oh, don't let all my trading view people. It's up. Do I have momentum? Smalls are above, large are going. I'll give you the momentum. Do I have a clear path? Ooh, Miss Kathy. See, this is why we do this drill in the room. Small triggers are above the fib, large triggers are not. So it's not a clear path, is it? Isn't it funny how in the moment you can make a mistake and then take a deep breath and correct it? And Kathy, you just corrected. Self-diagnosis is huge, guys. It's the potential And now if you're like me, it's pretty crappy potential. That's not my best look, right? So if I were going to look for an entry, I better have a low risk spot inside of triggers that gives me the opportunity, ta-da, to take this trade. Remember when we said price closes the gap to large triggers? It did. And now they're going to make decisions and decide which way to go. But perfect large chart read, Miss Kathy. All right. Up or down? It's boring, isn't it? Mark, this isn't trading. This is some crap making us read these charts. It's down. Do I have momentum? That's rule number 1. Yeah, I do. There's Caleb. Talk to me about my path, guys. Tell me what I see on my path. Is it clear? Is it potential? Is it a term? Hell, I don't know. There's 2 through. What does that mean, Kathy? 2 through is clear, right? Because the price is below it? Am I reading that right? No? What does 2 mean? Means potential. Is it my best potential, or is it a meh, maybe not my best potential? Meh, I like it, Master B. It could break, right? But check this out. 62.75 has 2 trigger potential. How do we feel about 62.90? Is that area even broken? So I'm relying on momentum to not just break 62.75, but to finish the job on 62.90, 15 points above me, 15 ticks above me. My small chart's strong. I like that. My small chart doesn't have divergence. I like that as well. I'm coming from a strong top. Bonus. If I were going to take a shot, I could take it from an area inside of triggers. So from 85, my stop, according to the rules, belongs at 63.02. That's $170 per contract. So here's the question that you have to answer. If I don't have a clear path, and it's the meh potential, that's a technical term. It's derived from the Greek meis, meaning not so great. Do I want to risk $340 on a meh potential look? I can't answer that question for you guys. I can't tell you whether the answer is yes or no. I can't tell you if that's your right trade or it's not. And I'm going to tell you, if you haven't been in a trade for an hour and a half, you can't wait to take that trade. You're excited to take that trade. You are going to hope with everything you have that those areas hold. And they might. But you've got to be able to answer those first questions first, guys. Because when you understand what is working for you and working against you, it's going to help you make decisions about your entry. It's going to help you know how aggressively you need to manage it. I will never, ever tell you guys how to trade. I'll never tell you that you should enter or you shouldn't enter. I'll tell you how to read your charts to recognize advantages so you can make good decisions, so that you can make your decisions. I am not the trade police. I refuse to be the trade police. Good stuff. Good lessons. Thanks for playing along, everybody. I know it seems stupid to not take trades, but reading charts is the most important thing you can do, guys. Reading charts and understanding advantages is what's going to take you next level. It really is. Gestapo. It's such a fun word. Pete says, everything is up, everything is strong, everything's above the fibs. But because of 3 divergences, I'm going to try to ride that short down to trouble when my small chart turns. Counter trend trade. Well, it's a termination, right? It's a termination. You're just saying, I've got a termination. Let's see if it holds. It's a great read. This looks like Mike. Odds favorable momentum triggers. Mike believes in. This was you, right, Mike? So strongest triggers you could ever hope for, right? Mike doesn't need background color to tell him to go short with this look. Let's see. You've got at least 3 triggers through. You've got strong triggers on the small chart. And you take the perfect momentum trade and you ride that momentum down. Absolutely perfect. Took first profit, moved the stop, came back and hit it. Outstanding trade, Mike M. That is the textbook momentum trade as Nexgen has been teaching it for 10 years. And you nailed it, 100%. Momentum, potential to break, strong triggers, snap back to the fib, ride that thing down. You forgot the language. Well, you didn't forget the looks. Great trade. Boaz. Momentum, path, pull back to the area inside of triggers. Your ninja fail in a trade and you had everything in place and you still made money. Nice trade, Boaz. Momentum and path. Late on the entry. So, Boaz, have you heard the lesson in the room? And this is a NASDAQ specific lesson. When you have momentum and path, if you pull back to the area inside of triggers and the small triggers are a full bar away, you can take it at the area and see what the reaction is going to be. You got in on the way down. I love it. I'm not sure why you took an exit at 58.50 with an entry at 60.75. $40 isn't going to buy a lot of groceries. Could have at least held it to the first sign of trouble. But with a clear path, Boaz, with nothing in the way, 47.55 is the first spot that even has the potential to offer some fight to you. But great trade. Oh, it's because your ninja failed. Stupid ninja. Nice one. Darn it, trade. Triggers are down. Strong side of the triggers. You got in at 57, which means, let's see, 57. So you get in with the close. You had room to the VWAP. You get out at the trouble. 120. It went to the set second profit target, did something, and closed the whole trade for like 120. That happens. Room to targets wasn't there. Not so much. It was a very, very tight trade. But with the strong triggers, you took a shot. Nice job, Victor. Nice job. Miss Jen. Well, that looks familiar, doesn't it? Victor, look at that. Your trouble held, pulled back up, gave even more room to trouble, and Jen rocks it out down. Nice job, both of you. Victor takes the first one, gets paid. Jen says, hey, look, they're coming back for me. I'll get paid too, Victor. You guys are in cahoots. There's no doubt in my mind. Nicely done, both of you. Nicely done, all of you. You're $80 from passing, Victor? Can I ask you a question, and hopefully the answer's what I think it's going to be. Are you passing your evaluation with this plan? Are you using this plan to pass the evaluation? All the way. That's weird. What kind of funding company hands you a plan to pass the evaluation? freaking awesome one, guys, is the answer. Someone that wants you to be successful. Somebody that wants you to win more than you lose. So I'm going to say real quick, based on this, if you are in this room and you're in the funding company and you haven't passed, it might be okay to take a step back, to keep it simple, to keep it focused. People are finding success with this plan. Caleb, strong triggers, you get below the 99 fib, you have room to the next fib, and you just write it down to trouble. Sure, Lenny, for Ninja Trader or for TradingView? Caleb, you do great work with that momentum trade, man. 2 charts screaming, it's hard to not do well. Ninja, I got you. There you go, Lenny. And of course, if you have questions, don't hesitate, man. You know you're always welcome in this room. De nada. Guys, I want you guys posting. I see a lot of the same names in here that don't have much to say. I hope it's because you just like the sound of my voice and not because you need help and you're hoping that you're going to get it by sitting on the sidelines. It's hard. It's hard to teach yourself to day trade. It's very beneficial to have a coach. I want to be your coach. That's my goal. Every day is to coach you guys into where you need to be. Man, I open a lot of stuff, right? So we're at a termination. No triggers through. Whole lot of momentum. I'm going to leave you guys with this one, and I'm going to walk away for real. I'll be back in about 5 minutes, and we'll finish the class strong, guys. It's going to be up to you to tell me what we're talking about. It's going to be up to you to tell me what you need help with. But if you do, my promise is I'll give it to you. See you in 5. Last hour on a Friday. This is your last chance to ask questions before you have to go suffer in the sun and surf and golf course and with family and friends and all that stuff. All right, let's see what we did. Made a few mistakes on this one. Both trades strong. Room. Keep eyes on that VWAP. Pull back. Accidentally clicked buy instead of sell because you weren't paying attention. Lost 40 on that silly mistake. Hunter, there is nobody in this room that has not made that silly mistake. So finally, welcome to the club. Mistake 2, set the first target here instead of up higher. So you got missed and then stopped out. It happens. It does happen. And sometimes the one thing, Hunter, and guys, I think this is new for some people. So this VWAP, and you'll see it on your small chart too, this is a volume weighted average price. And that VWAP is notorious for stopping markets and creating bounces. That VWAP is every bit as powerful as any zone. That VWAP is every bit as powerful as one-to-ones. And I think that because it's a relatively new concept, the VWAP took your room to targets away. Does that make sense, Hunter? And I don't think a lot of people notice it. But that should be on your radar, always. That VWAP should always be on the radar. And then you get the pullback, mid-band, close on the correct side of the triggers. You get paid right at trouble, right at the VWAP, and then it's perfect. And you're $20 down. And then all that kerfuffle still being $20 down. I wouldn't say there were so many dumb mistakes. The $40 on the accidental entry, Hunter, means that you're up 20 bucks. You took a loser and you took a winner. And your loser just didn't have a whole lot of room. And that was a management. It wasn't an entry mistake. That was a management opportunity. But if you take away the one that we all make, you would have been up 20 bucks. And you got a great lesson for it. So don't beat yourself up, and strong work on using the word kerfuffle. I don't think I've ever heard that word, but I like it. Nicely done. Nicely done, Hunter. Whoops, what did I do? Need to correspond with Jason and Tech. Put a ticket in, Lenny. So here, follow this link I'm about to give you. So here in Discord, guys, is the easiest way to do it. So Lenny, just follow that link to tech support, put in a ticket, and then Jason will message you as soon as he's ready for you. Miss Kathy, I did. Will you put them back in the room for me? So I don't have to go chase them? I will chase them if you need me to. But if you have them right in front of you, that'd be awesome. Just repost them real quick. We went over them, but I'm glad to go over them again. And when you watch the YouTube video, I'm sorry for all the names I called you. I thought you were here listening. I'm looking. Almost there. Pete, Andy, Pete. That was earlier. I'm looking for them right now, Miss Kathy. Oh, there we go. That's so much easier. Thank you for that. All right, so this one, a trade is momentum, and you knew that you had it. And a trade is a clear path, and you knew that you didn't have it. And then you went straight to the rules, which I love. You went straight to your checklist. I don't have a strong top or bottom. I do have momentum on both charts. And I had divergence. And Miss Kathy, you just simply said, with 50% of the good stuff gone, I choose not to take the trade. Outstanding. It just, no matter what happens next, you didn't have an edge, so you decided to do nothing. It's the hardest thing you'll ever do, guys. You're going to hear me say that every day. The hardest thing you will ever do is absolutely nothing. And it's funny that that's it. When we were teenagers, that's all we wanted to do. And I like this one, Kathy. So a trade is momentum, and you've got it circled, squared. And a trade is a clear path, and you put absolutely. And I love that. And then I don't read Braille, so I don't know what you think about the entry area. Just kidding. There is no entry area. You're saying that with momentum, with a clear path, with room to trouble, there's an opportunity to just ride the momentum on both charts and get paid. And you got stopped out after the $100. And this is the part that I talked about. When you're taking a trade that relies 100% on momentum and nothing in the way, have you guys ever noticed? Hold on. My goodness. Have you guys ever noticed that it's pretty rare? Well, of course, I say that and then here it is. It typically looks more like this. The market doesn't move in straight lines that often. There always seems to be some sort of little fluctuations in there. And the reasoning is that there's almost always a fight. So, Miss Kathy, one of the things that Ron, and I won't even say because it's not a Nexgen trade, one of the things that Ron mentions when he built this trade, when he started this trade, is his profit targets are $110. And they're $110 because this is a look that you can take. It's a short term, it's a small look, it's an overwhelming advantages look, but the market tends to fluctuate and it's not difficult to get stopped out of a momentum trade. And he will literally take $110 a contract, 2, 3, 4 contracts. And he told us last year, he shared this in the room, which I think is cool. He cleared $160,000 last year. Put it in his bank account. Never taking a trade bigger than $112.50 per contract. So on these momentum trades, it's okay to get paid and wait for the next one. And gold tends to be very, very volatile. I've worked with a few people on chili dog trades, Kathy, and NASDAQ and gold tend to produce worse results long term. Right on. Because NinjaTrader and gold tend to fluctuate more than crude oil or S&P, the success rates that I've seen with the chili dog on those two are considerably lower than 50%. And stops have to be much bigger to survive them, and it's just easier on other markets. Just a little FYI. Trade wherever you want, but it's a great trade. It's a great entry. And the cool thing is, Kathy, is with this look, if you get paid twice, $220, and it does fail, it's probably going to come right back to an area inside of triggers. It was fun that it worked. Yeah, it's a great trade. I love the trade. I do love the trade. They're just pushing, right? Momentum's pushing. It's a tough look to find a trade, but they're pushing. You're so welcome. I appreciate that you post in the room. I really do. There's that potential to break look, divergences. There's you getting stopped out if you broke your rules. All right. What direction, guys? Let's do it again. What direction is the market trending? Up or down? Down. Do you have strong triggers? Got you in 1 second, Rat. Do you guys remember when I said if the colors don't match, you can never have rule number 1 met? Nobody remembers that, but you don't have momentum. Is there a clear path? Two triggers below, two triggers above? No. With 66% of the good stuff gone, should I look for a trade? That's the question you have to ask yourself. With 60% of my advantages gone, with no advantages on the large chart, should I be going to the small chart and looking for a trade? You guys will come up with your own answers. I can't answer that for you. My plan says no, but your plan may be different. So big rat on Ron's trade, and we'll go to Miss Kathy's just so that we can do it. You literally jump the fudge in. There is no pullback. There is no waiting for retracement. You are literally strong triggers, and jump in. Jump the fudge in and hope it goes. And then Samuel, the colors on both charts don't have to match. They really don't. The lesson that I was saying is that the only way you can have strong triggers is if the colors of the triggers match. If your background is green on the large chart, both large and small triggers have to be green as well. If the background is red on the large chart, both small and large triggers must be red as well. And that's what assures that you have rule number one met, Samuel. That is the strong momentum look. What will happen sometimes, and let's see if we can find an example of it. I'm going to, just for grins, circle this tail. What will happen sometimes, Samuel, is, oh, there it is right there. You'll have all of this momentum and the potential to break, and I want you to see inside of this one bar with all of those advantages, do you see how the market went up, went down, went up, and then finally continued down? And in the middle of all of that small chart nonsense, you got a green background. So the rules don't mention anything about when looking for entries that both charts have to match in color, because this still fits the language. It's a pullback to an area inside of triggers. Does that make sense, Samuel? But I can only have odds favorable momentum if this is red and this is red. So right here, I don't have momentum up or down. I'm so glad you said that. Guys, when you say something in the room, it lets me know where you're at with your reads. And sometimes there's a little correction. So thank you for giving me the opportunity to do that. How do I open multiple workspaces? Yours just changed the charts that are up instead of opening the next set on NinjaTrader. So, Rat, you've got to... All right, do you want me to call you Big or Rat? Either way. So whatever is open, it only shows one at a time. So right now I've got crude oil open and I've got S&P, and it'll only show one. I have to manually open the charts. It won't just go to the next one, so they actually have to be opened. And when you have them open, what you can do is you can hit Shift F3 and it will toggle in between any open workspaces. There are some people that will use this and add another tab, and on that tab they'll do the S&P and they'll do a 13.2, right? And they'll hit OK. And there are people that have been known to, instead of toggling in between, going in between tabs. But if you go in between tabs, you have to go in between tabs on two charts. I prefer the Shift F3. And then if you have another workspace that you need open, like maybe you want to watch NASDAQ too, you'll have to physically go open up that NASDAQ workspace and bring it up. And mine's coming up right now. Does that make sense? Did I answer the question? I always like to make sure that I'm actually answering the question that was asked. I don't always. Sometimes I mess it up. So you want to have multiple markets open on a couple screens. So what you would need to do, I see what you're saying. So what you would need to do, right, is inside. So this is my NASDAQ workspace. If I wanted to have crude oil up on the other screen, I would have to do this. I would have to build a crude oil chart inside of this workspace. So I would build the crude oil chart and I would put it together. And then when that chart was built, I would have to slide it over to my other monitor. And then I would have to build my small chart. And I'll do it again. There's my 5-1. And that was crude oil. And I click OK. And I bring crude oil, and I'm going to slide this one over to my other monitor. And then what I have is if I click and drag, I've got NASDAQ and I've got crude oil, and I can see them both. So, and then inside of that workspace, inside of that NASDAQ workspace, now you have both NASDAQ and crude oil. So I could get rid of my crude oil workspace if I wanted to watch them at the same time. And I could save that two chart setup, do save as, and I'll just call it NASDAQ and crude oil combo. So I didn't mess up my NASDAQ on its own. Now I've got NASDAQ crude oil combo. Does that help? And as you can see, I can watch both the NASDAQ and crude oil at the same time now. And this is what I want to throw out there though. And I want you guys to understand that everybody's different. If I'm looking here for rules to be met and making entry decisions here, and out of the corner of my eye I think I see a trade here, and I'm trying to figure out entry rules here, I have taken 100% of my attention and I have reduced it by half. And I am half committed with my attention to the NASDAQ, and I am half committed with my attention to crude oil. And everybody's different. And Rat, you may be gifted. You are probably smarter than me. Most people are. What works better for me, and has for a lot of my students, is I look at this NASDAQ chart and I say, you know what? This is what I see. I don't have rules met. Now let me go to the other chart. Let me give it 100% of my attention and see if I have rules met over here. And when you start doing multiple markets, if you feel like you missed an entry on the S&P, you may try to make up for it on the NASDAQ. And if you feel like you missed an entry on the NASDAQ, you may try to make up for it on crude oil. Yes, Miss Kathy, Shift F3 will take you right through all of them. And what it does is it lets you have a singular focus, right? I'm looking at one market, 3 rules, 2 charts. That's as easy as I can make it on my brain. But there are a lot of you that are gifted. I've met traders that trade with 6. So you work 12 hours, you don't have the time to sit here for 3 or 4 hours. I get it. So Big Rat, Do I have rules met for a trade on crude oil right now? I don't. Do I have rules met on the S&P for a trade right now? I don't. Do I have rules met on the NASDAQ right now? I don't. Big Rat, you looking at more markets isn't going to produce more trades. It's not going to make the rules met more often. And if you focus on being able to recognize rules met or rules not met, it'll literally take you 3 seconds to do that read and go back through. I got my ass handed to me for years trying to make something happen in the time frame that I created for myself. I'm not saying that you will, but if you try to force something when there's nothing to happen, it creates problems. Study that chili dog. It happens a lot. That may be your saving grace on that one, because high probability trend trades happen less often. And let me know how I can help. And when I say stuff like that, guys, it's not me telling you don't. It's me telling you I've lost lots doing exactly what you're telling me you're trying to do. So make sure that it suits your personality. Make sure that your brain can do it. That's why there's two. Did you guys know that in the TradingView app, you can actually pull a market out? I'm going to put it back in though. So I pulled my NASDAQ chart out of my other one. Get back in there. I don't know, it's not going, I'll figure it out. Make it smaller. I believe you just drop it right in. Why is it not working? I don't know. We'll figure it out later. What do you guys want to talk about? You just got the automated system, Kathy? How to post a picture and not a link? Absolutely. So Mike, what platform are you using to take your pictures? Or what capture tool are you using? Is it Snagit? Cool. So in Snagit, when you take a picture, right click on it and hit copy and paste it in the room. How easy is that? And then you don't have to go through all of the downloading. That was too easy, wasn't it? You were using, yeah, so the share button, this is great. I'll use the share button when I want that link so I can go put it in my tracking sheet. Or if I'm trying to share it with people. I personally like having the links, but copy paste works fine. If you're at the point where you're not saving pictures anymore, copy paste is amazing. And you guys know that you can go back and find the pictures that you've taken as well? All 16,000 of them. Good stuff. I really want that back into. Trying to get my NASDAQ chart back in there. Some days it's really easy. And some days... Oh, you have to pull it by the tab. That was my bad. Okay. There we go. Now we have the NASDAQ. Guys, what can I do for you? We got 20 minutes. I'm feeling smart today. Take advantage of that. Sure. I'd be happy to, George. George asked, can you explain the difference between the one-to-ones? And George, because I'm not a techie sort of guy, I'm gonna go to the indicators as well here. And small triggers, function, next-gen areas, one-to-ones. So the yellow and magenta, and I think that, let's see if we can get it to bring up a link. I'm going to find where all of those definitions are real quick. Screen capture, join the affiliate trade tracking. Maybe it's in the software guide. Glossary of commonly used terms. All right, so Chris killed my stuff, so let's go through it, and we'll do it over here. Two styles of one-to-ones. So there are the large swing one-to-ones. And the large swing one-to-ones, and here's the example right there. These are big move one-to-ones, George. So the software sees an A pivot, and the software sees a B pivot, and the software gets a C pivot, and it goes through all of this. And the cool thing is you don't have to know any of it. From A to B is equidistant from C to the potential D. And the yellow one-to-ones will print right where D would be if a pivot is formed. So it's a 100% Fibonacci alternate. Does that make sense? Ooh, that's big. That wasn't the right tool. So the yellow ones, George, are from excuse me, my goodness. The yellow ones, and I think I'm about to crash Ninja Trader, are from big moves, and the pink ones are from smaller moves within the moves, and that's really your answer there. Big swings, little swings. On any other market other than NASDAQ, I typically ignore them. On crude oil and S&P, I don't worry about it, but because the NASDAQ is a 34, they carry a little more weight. Good question. So depending on what you're trading, if you're on TradingView, let me say that, if you're on TradingView, they carry the exact same weight. Pink one-to-ones are every bit as important as yellow because of the broad scope that a 15-minute carries. Good question, George. I hope that got your answer for you. On a trade like this, if price breaks below the yellow one-to-ones, you do technically have room or not. Absolutely. Absolutely, Hunter. So check it out. Let me show you my trick, and let me know if this is helpful for everybody. When I see this sort of look, Hunter, I'll take my trend line tool, and I'll put a green dashed line. It can be any color you want, but I'll put a dashed line right on those one-to-ones. And what I'm saying is that if I take a close below, it better be below trouble. And it gives me a visual. And you can see you got to close below the triggers. It didn't have anywhere to go, and sure enough, it shot right back up. It's fun to try to time it by a tick. It really is. And when it works, you look like an absolute rock star. And you would have absolutely had room. On the big chart. On the small chart, the close below gave you 3 ticks to anything that could cause trouble. Does that make sense? Technically, yes, large chart has room. And if there's no trouble on the small chart, you can take a shot. You could support it in a court of law. that you did in fact have room. But I'll use that trick where I take the trend line to make sure that I am actually closing below trouble, that I am on the other side. You're welcome. That's another really good question. Hey, Paul W. I see you sneaking into class. Good to see you, man. Triggers are down. Weak side of the triggers. Room to trouble. It just pulled back to areas. Haven't gotten a close on the correct side. Does it fit the rules for a short? Hunter, here we go. This is a great example, Hunter. See the VWAP? If I get above that VWAP, I don't want to go short into it. There's my line in the sand. Same way we did it with these. You can see the VWAP holding. So down, room. I've got 38 seconds before I know if I'm going to have a close on the correct side of the triggers. Does this make sense, everybody? I've got 28 seconds until I know. I've got 24 seconds until I know. Does it fit the rules for a short trade? If I have room to trouble? These sons of guns. They're messing with me. And that is approximately from there, $200 per contract risk. 4, 3, 2, 1. Ooh, that was an up bar, not a down bar. That was an up bar, not a down bar. They almost got me. My rules say I need a down bar. So Chariot right here, see the little wagon wheel in the bottom right corner? If you click on it and go to more settings, under scales and lines, countdown to bar close, and you could put it just on the small chart. You could apply it to both charts. And what it does is it lets you know how long you have until you get that close on the correct side. And for me, Chariot, I am a jumpy mofo sometimes. That is such a calming feature for me too. So there's 8, 7, 6. That's a lot of risk, right? 3, 2, 1. There we go. Rules met. Stop above. We'll just do profits at targets or at trouble. We could take one off at a mid band just for grins. Did it fit the rules, guys? What do you think? Triggers down. Weak sided triggers. Close below the triggers. Room to trouble. I have to accept whatever happens, right? It's either going to win or it's going to lose. It's either going to run or it's going to fail. I'm not in charge of that. The only thing I'm in charge of is whether or not my rules are met. Does it fit the plan? That's what I ask myself every time I take a trade. Does it fit the plan? Does it meet the criteria? Can I match it up to a checklist? And if I can, I'm obligated to take the trade per my plan. And I'll never be in control of whether or not it works. And I'll never be in control of whether or not it wins or loses. The only thing I can do is follow a plan that's based on advantages, that has repeatable. If you can't do it in Discord, Lenny, get a hold of them through the website. Send them an email, send them a message, reach out for help like that. You're welcome. And now we've got to sit and watch it dance, right? Now we've got to wonder if it's going to work. Now we've got to wonder if it's going to go down or if it's going to go up or if I made a mistake or am I wrong? Am I right? Guys, if it fits my rules, I'm obligated to take the trade. Now you can incorporate management and you can say, hey, if I get a close above those small triggers, maybe I don't want it. That's something that you could incorporate in time. Or you might say, I'm just going to take my loser if it produces a loser. And guys, it's kind of fun, right? You're not in control. You never have been, you never will be. We'll see if that VWAP wants to hold. Maybe if I get back above the VWAP, I close it out, I take a loser, right? But it hasn't happened yet. There it goes. Uh-oh. Boom, they got me. They got me. That's okay. That's a part of trading. Did it fit the plan? 100%. Was my stop in the right spot? 100%. Did I have the advantage of a downtrend? Did I have the advantage of a clear path? Did I have the advantage and the patience to get in on the close on the correct side of the triggers? 100%, guys. I will live and die by that trade. I will take it every time. Every time. Cool stuff, right? So much so, yep, I took it in my live account. Doesn't faze me. I'll take that loser. It's a part of it. What do you guys want to talk about? Yeah, that was my short. Rinko gave a different look, didn't it? Even Rinko said no longs, weak triggers, not enough triggers through, divergence printing. Even Rinko said it had a shot. Directly into trouble, even with momentum. Directly into trouble, even with momentum. Just gotta pause, gotta wait. All right, guys, I'm gonna get you